In the realm of electric vehicles, NIO has consistently garnered attention and secured its position at the forefront. A Chinese electric vehicle manufacturer that's been grabbing headlines, and the recent roller coaster ride of its stock on the market is not something anyone can ignore. Today, we're diving into the electrifying story of NIO, exploring its journey through the highs and lows and unraveling the clues that hint at its potential revival. So, let's jump right in and explore the twists and turns that make NIO a fascinating contender in the electric vehicle race. NIO has experienced its fair share of ups and downs in the eyes of Wall Street. It's like a seesaw. Sometimes it's the darling of financial markets, while other times it seems to be in the shadows. But here's the intriguing twist. Lately, the tides have turned in NIO's favor. Over the past months, traders have been leaning towards NIO stock, nearly doubling its price. And the story doesn't end there. There's a sense that there's still some untapped potential, particularly when you consider NIO's recent electric vehicle delivery stats. In July, NIO stock faced skepticism from Morgan Stanley analyst Tim Xiao, who wasn't exactly bullish, referring to it as a show-me stock. He believed that NIO needed consistent positive results to regain market trust. But it seems Xiao's perspective might be shifting. He revised his outlook recently, slapping an ambitious $18.70 price target on NIO shares, signaling a positive stance and room for growth beyond the current stock value. In fact, he upgraded his rating to overweight. The reason behind this change? Xiao is taking a new view on NIO's performance. He's suggesting that the lackluster first half of 2023 is now in the rearview mirror. According to him, NIO has reached an inflection point marked by significant operational improvements and potential opportunities for a reevaluation. Xiao highlights multiple factors contributing to this revised stance. This includes a surge in production, favorable government policies, advancements in autonomous driving, and the potential for technology monetization. Now, NIO's recent delivery performance has been turning heads. The big question on everyone's mind: has the lackluster start of 2023 been left behind, and is NIO entering a pivotal moment? Let's take a closer look at the latest EV delivery results to find out. Remember back to May of this year when NIO delivered 6,155 vehicles? It's not quite awe-inspiring, and the term lackluster might even come to mind. But here's where the plot thickens. There was a major leap by June. NIO didn't just up its game, it delivered 10,707 vehicles. Now, imagine the trajectory continuing. July takes it to a whole new level, with an impressive 20,462 vehicles delivered. This is a whopping 103.5% increase from the previous year, a milestone for NIO, marking its highest monthly EV delivery ever. Deutsche Bank also had a role in the unfolding NIO story. When analyst Edison offered up a new price target for NIO stock, it sent a ripple through the market. The original price tag of $13 per share was swapped for a more optimistic $17 per share, signifying a potential surge of around 28.3%. So, what's the significance? Well, it's like having a clearer path ahead. Investors could witness a noticeable climb in the stock value during the early days of August. Let's add some context here. This upbeat price target isn't just a lone voice, it stands out. The general consensus among analysts sits at a more moderate $13.31 per share. Yet, Edison from Deutsche Bank is making a bold statement with his prediction, indicating a certain confidence level in NIO's potential to outperform the consensus. Oh, and there's more to the story. Edison isn't just talking numbers, he's also reiterating his buy recommendation for NIO's shares. Now, if we look around, we'll find that most analysts are leaning towards a hold position based on the collective opinions of 10 experts. But before we continue, we want to thank you for watching this far. For the last 3 months, these 10 financial experts have been doing some number crunching on NIO. They've come up with their 12-month price predictions, showing where they think the stock might be headed. The math adds up to an average price target of $12.40 per share. Now, that's not the whole story. It's like a range, the kind that stretches from $8 per share all the way to a confident $20 per share. Now let's take a closer look at the recent journey of NIO stock. As of the latest update, the stock price has inched up by a tiny 0.09% from its previous closing mark of 10.79 on August 22nd. However, it's worth noting that there's been a 9.32% drop in the stock price over the last 5 trading sessions. Shifting our focus to NIO's overall market performance, we see some notable trends. In the past week, the stock has experienced a decline of 9.32%, showing a significant movement. Zooming out a bit, the monthly performance showcases a decrease of 7.93%, while the broader picture reveals a quarterly rise of 50.62%. And then there's the element of volatility, an indicator of the stock's potential fluctuations. The past week's volatility ratio stands at 10%, suggesting some market turbulence. Expanding the scope to the last 30 days, the volatility levels rose to 22.95%, indicating more pronounced price swings for NIO. In terms of averages, we're talking about moving figures. For the last 20 days, the simple moving average has settled at 13.26% for NIO stock, signifying a certain level of recent fluctuation. Stepping back, the previous 200 days paint a slightly calmer picture, with a simple moving average of 10.19%. Furthermore, the company's current market cap is approximately $18.26 billion. When it comes to tracking the pulse of short-term price movements, revisions play a crucial role. Over the past week, there haven't been any reviews, either upwards or downwards, indicating a specific stability in sentiment. Now, delving into the technical side of things, the signals from short-term indicators align, they're unanimously shouting buy. Moving along, medium-term indicators echo the same sentiment, maintaining a 100% buy stance. Long-term hands, however, hold a slightly different viewpoint, placing the stock in a 50% buy category. Now, imagine 39 more experts adding their voices to the mix. They've rated the stock on a scale from 1.00 to 5.00, ranging from strong buy to solid sell recommendations. Out of this bunch, 12 analysts have opted for a hold rating, while 22 voices are singing the buy tune, and 5 are even louder with an overweight note. Interestingly, there's no negative sentiment here, no underweight or sell labels. This consensus leads to an overweight average rating, offering a hint of opportunity for investors considering an uptick in their company stock holdings. Speaking of opportunities, analysts have been busy calculating potential price targets. Their average 52-week prediction for the company's stock hovers at $87.28. Now, the spread here is fascinating. The low mark of $45.84 indicates a drop of about -240.56% from the current price level, while aiming for the high of $151.16 would require a remarkable leap of -1,023.03%. Somewhere in between lies a more plausible scenario, with the median price target of $73.25 suggesting a much more welcome -444.21% increase. As you can see, NIO stock performance has been a blend of ups and downs in recent times. The market's response has been a bit of a roller coaster, with varying opinions from different experts and analysts. It's a mosaic of viewpoints, with some praising NIO's delivery data and optimistic price targets, while others hold more cautious outlooks. Before diving into any investment decisions, it's crucial for viewers to remember that the market is a complex landscape. Personal research and understanding risk tolerance are equally important. The stock market is a realm of uncertainty and potential rewards, and each individual's financial situation is unique. Now, the big question remains. Do you think NIO's recent performance paints a picture of future success, or do challenges still lie ahead? And while you're at it, make sure to smash the like and subscribe buttons down below. Additionally, if you want to know more about NIO, I highly recommend watching this terrific video. Just click this video right here. Thank you for tuning in, and stay tuned for more exciting content in the future.